Hey, good afternoon, everybody. Thank you for joining our webinar today about the East Powell duplexes. We're excited to get started here. I'm just going to make sure all my devices are muted, and I think I've got this set to where attendees can just jump in, and we're not going to have to let them in, and it's not going to distract me from getting going here. So I'm excited, and thank you again for joining us. My name is Steve Olson. I'll tell you a little bit about myself here shortly. But first, what we want to start talking about, just a high level intro, the Peak Group, right? We our aim is to build an innovative company that's totally vertically integrated, that impacts lives for better. That's you as a prospective investor. That's our prospective tenants, everybody that we work with. We found that when it's a win across the board, there's so much more longevity to it, and that really is our goal, to provide those solid, clean places to rent, whether it's commercial or residential, and great returns for you, the investors, so that you can go about your life doing what you like to do, what you love to do. We handle the rest on the investment front. So some of you have spoken with us before, but we'll kind of go through it on a high level here, right? So Peak is, like I said on the previous slide, we are a vertically integrated company. We are a construction company and a builder in most of the markets that we operate in. We are a brokerage. We are our own property management company, and we do the majority of our own in-house funding for acquisition and development loans and all the capital intensive activities that are needed when you build and develop real estate. When you're building and developing, there's just no end to the cash that's needed, and so that's something that we have brought in house, and it allows us to be a lot more nimble and flexible. So it goes all the way from selecting the right properties for you, making closing as easy as possible, making that build as easy as possible. If any of you have ever built a property, a lot of times by the end, the nicest thing you can say about your builder is, I don't want to kill him, right? That happens a lot. So we aim to do much better than that and make it a seamless process to where really it is just DocuSign and inspections, right? Make it really easy for you. And then to manage the property, get it leased up, make sure those tenants are treated well, make sure repairs are addressed. Heaven forbid, make sure that evictions are properly handled and we follow the law, we get that property back on the market as soon as possible. And then for your CPA, the reports, right? Make sure you have all the correct reports so that the brain damage is minimal. You can send those to your CPA, prep your taxes, and then you get to make those returns in real estate. I always like to talk about the five ways that we make money in real estate, how it's ideal, IDEAL. We get income, depreciation, equity, appreciation, and leverage. And all three of those, all five of those methods pay us together at various times. One is doing better than the others, but it allows you, an investor who's relatively hands off, who probably lives thousands of miles away from the property, to get all those benefits. Because you can invest. I had a conversation with an investor yesterday. You can invest in properties and indirectly, like as a limited partner in a fund, or you can buy shares of a real estate investment trust. And that's great. It gets you some of those benefits. The one big pro to that is you don't have to do anything at all, right? Nothing at all. When you do direct ownership, like through Peak, occasionally you have to make some decisions. And, that matters too, of course. But as a result, you forfeit some of those five benefits that come from owning real estate. Most notably, you forfeit control. This same investor that I spoke to yesterday was telling me how he's an LP in some syndicated apartment deals, and it's okay, but he's had to do some capital calls. The returns are really low. You know what? That can happen to any property, right? We all swim in a sea that is much, much bigger than any one of us. And our assets are in that sea too. But sometimes investors like to have the control to say, okay, I want to sell. I want to change management. I want to change lending. And you can't do that when you're a limited partner in a syndication. You can't do that as a REIT. You can just buy it or sell it and you wait for somebody else to do their thing. If they do it, it's great. If they don't, not so great because you're stuck. So that's the kind of people, the kind of investors that come to us are looking for those assets. And we really are focusing on appreciation. We want to build in rapidly growing areas. And I think that's kind of a spectrum. Some of them are just going like crazy. Some of them are nice and even. And that's a conversation that we'll have with you as an investor, right? So we're looking for areas that are going to have that appreciation, yet we want market stability as well, right? There are boom and bust markets out there. There are reasons you can or should not invest into those markets, right? Altogether. But can we get markets that are known to just always go with the rate inflation or better, right? I've noticed in many markets there's been a loss of anywhere from 5 to 20% of equity over the last 3 years while we've been in this interest rate freeze. So it's important to have that market stability and know that, okay, even when we are swimming in that sea that's much bigger than all of us, I'm not likely to have a very, very steep drop in my property value, right? So that's another thing we're looking for. And then always, can this deal cash flow, right? From day one. If the property cash flows from day one, wow, you can really weather those storms that come along because they do come, right? I've had properties that never caused me an ounce of trouble. I've had properties that were pretty difficult sometimes, but because I bought them right with cash flow and the right debt from day one, you can weather those storms. And I think that's one of the biggest keys of being a successful real estate investor is having that staying power. Right? You've heard that adage that, invest in land because they're not making any more of it. And that's true. And I've been watching CNBC this morning. There's all this talk about AI and how many jobs that it's replacing and how's that gonna affect everything? And there's no doubt it will and already is affecting things. But ultimately, we don't have the technology yet, right? This is not the Matrix, to not have a place to lay our head down at night, to cook dinner, to live with our family, or to run our business out of, right? There is a physical component to the world, and we aim to fill that in desirable markets. And we're excited to have you join us on the webinar today. So, and I was wrong. Some of my automatic admits to the webinar aren't working. So, for those of you that were waiting for a while, I got to kind of pay attention to that. So, we'll keep going here. All right. For those of you that not have spoken with us before, who the Peak is, right? Ryan Bowers, I think he may be on. He's our founder and CEO, along with his brother Todd. He's our founder and chief of construction. They moved to Dallas, Fort Worth, which is where our principal office is, many years ago from Oregon, started renovating homes, and eventually grew it into this vertically integrated company that operates there and in a few other markets that we'll get to in just a second. Good friend Levi Mills is our principal broker. Many of you will deal with him at some point. Levi keeps our licensing current and helps me fill in all the details along the way and is an invaluable part of the team. Gustavo Galindo, when you invest in properties with, you're going to definitely talk with Gustavo. Gustavo does, in my mind, the most important thing, right? All this stuff I've talked about finding a good area, building the property, that's all fine and dandy, but it's got to be rented to somebody who's going to write a check every single month, right? So that's what Gustavo does, and he's got a staff behind him, as do the other individuals here. And I'm Steve. I'm the Chief Real Estate Officer. It's a quasi made up title, but actually it is a real title too. And anything that touches real estate, I'm a part of it at the company, help vet new projects, bring them to market, and get them in front of investors like you. I've done development work in 5 different states and helped investors acquire over 4,000 units over the many years that I have been in this business. So I'm glad to have you here today. Let's keep cruising along here. And before we get into why you're here about these duplexes in Fort Worth, just a quick little preview, and I won't bore you to death with it, about what we're up to. So we're based in the Dallas-Fort Worth area. Much of the work that we do is in that market, and we love it. Dallas is going to pass Chicago as the 3rd largest metro in America here in the next few years. It just continues to grow. I was in town at the office last week, and it's crazy. Cranes, work, stuff happening everywhere. I think it's going to grow all the way to Oklahoma if they let it. So we love that market. But we also own a general contracting firm and management team in Birmingham, Alabama. It's kind of on the opposite end of Dallas on the spectrum here, where it's got a low unemployment rate below the national average. It's got low expenses like insurance and taxes, unless you get down on the coast, and then it can become a bit of a thing. But we love that because it's a great place for individual investors or conservative investors to just hit base hits, right? To get brand new build single family homes. And we like to typically focus, 20 to 30 minutes outside of downtown Birmingham for those properties. And sometimes we do build for rent communities. We have one called Pinewood Trace we've been working on, and we're going to release a bunch of new lots for single family homes and maybe even some duplexes on that one. So stay tuned. And then we do these infill lots. You can buy infill lots and put up a house like the one you see on the left, which is just your classic American home. It's a 3-bed, 2.5 bath with a 2-car garage. And those homes typically rent for 18 to 1900. And we have an incentive on them where we've allocated 5 points of the purchase price to just optimize the financials for you. Most people think that that just goes towards a bulk buy down of an interest rate on a 30-year fix, which we've done that for plenty of people. If you were to do that today, you'd probably end up with an interest rate of about 5.75, somewhere in there. Now that can get a lot better quicker because that assumes a 20% down payment. But anytime you ratchet to 25 to 30, those 5 points we've allocated can go a lot further in buying down the interest rate. And you've got just more conservative debt on that true 30-year fixed rate deal. So those are just nice, solid base hits. In fact, we have an investor closing on one here in a couple of weeks, and they're just doing it all cash. They just want a nice, easy deal that they know people will live in and that they don't have to do very much work on. So we love Birmingham for that because, when Las Vegas is going up 40% in a year, Birmingham goes up 6. When Las Vegas goes down 30%, Birmingham goes up 1. It just pretty even keeled like that. So that's a market that might be of interest to you if everything I just told you kind of resonates. A very exciting new product that we've been working on, and there's lots of this coming down the pipeline here at the Peak Group, is our triple net commercial flex space. And I was at this project in Weatherford, Texas last week. I continue to be very impressed with Weatherford. This is a community that's 25 minutes or so outside of Fort Worth. And people commute from Weatherford into Fort Worth or vice versa, or they work in Weatherford. It's a big enough of a city that kind of stands on its own. They got a Costco, they got everything in Weatherford. And as you go down the main highway in Weatherford, you can't help but notice all the construction happening for retail and commercial and housing. It's just a really great growing suburb on the Fort Worth side of the Dallas-Fort Worth metro. And this commercial flex space that we're doing is designed to be kind of a hedge for those of you that want to participate in Texas, but maybe you're a little bit spooked about taxes and insurance, right? But property taxes are high in Texas. And as they've kind of tried to keep up with the rapid increase of people moving in values, the taxes kind of spiked and gave everybody some shock. And there's a lot of talk of, doing a law where they can only increase a certain percentage per year. But that doesn't help the insurance. Insurance is also expensive. It's not as bad as Houston, but it can be problematic. And so a way to mitigate that and participate in this market is through triple net flex space. It's commercial. We build these buildings like you see on the right, and they're metal buildings. I mean, they practically never need maintenance, but if they did, that is the tenant's responsibility, unless, of course, it's unoccupied. So on a triple net deal, the tenant pays the taxes, insurance, and maintenance. The leases are typically a minimum of 3 years, right? We find the tenants, we place those tenants, handle all the accounting that zeroes out that triple net for the month. And this gets to as close as a treasury bond while still being in real estate as you can get. Because, I mean, imagine 3-year leases where you're not responsible for any of those expenses. It's a great asset because typically if you want to invest in shallow bay flex or flex space, you've got to be a limited partner, which means you got to write some guy a check and trust that he's going to do his job. And don't get me wrong, many of them do, right? I'm a general partner. People have written me checks and I try my best to do my job, right? Or you've got to be the developer. You've got to be the one to do all this, to meet with the city, to draw the plans and handle all this work. So this is cool because it allows you to participate in that asset class, have those expenses get covered, but have the flexibility to finance it how you want, lease it how you want, sell it whenever you want, but also have us do the day-to-day for you, because chances are you don't want to do any of that. You just want to invest your money and print that check every month. And we think that this is a great, great option for you if you're looking for as hands-off as possible. We sell them at a 6% cap rate. That equates to a 255,000 per unit price on our pro forma right now. But the cool thing is, because I've had this conversation with so many investors, oh yeah, I'm buying this, but I'm worried about the rents. What if it rents for less after I close? And that's a very real risk. A very real benefit is it could rent for more too. They don't often bring that up, but it's a double-edged sword there. And so what we've done to just make this as easy as possible is say, okay, we'll get the tenant placed. When the lease is in place, we can back into what that cap rate is. And if it rented for less, then your purchase price might be 245 instead, right, per door. And so you're getting the same cap rate, you're getting the same return. So it's an exciting asset class. We've got sites under contract and under development in North Richland Hills, Texas, Flower Mound, Texas, Waxahachie, Texas. We just think that this is a big deal. And you can go ahead and Google it. JP Morgan is raising a large fund to buy as much of this stuff in Texas as they can right now. And so we're glad to be a little bit out in front of those guys. All right, we're almost to East Powell, but we also have some strategic joint ventures that we do typically here at the Peak Group. I love to be able to talk to an investor, hear what they're trying to do, and give them options, right? You've heard that old adage of if the only tool in your toolbox is a hammer, you treat everybody like a nail. And I do not want to hit you on the head with a hammer. And if I did, you should hit me back. But when we have options, we can hear you out on timing, budgets, returns, other criteria, and say, well, here's a couple that are as close to that as possible. And so I'm actually a co-developer on the property in Fort Wayne, Indiana. We work with a great group there that does construction and management throughout the state. Low unemployment rate, nice, good cash flow, landlord-friendly market. So not only in Fort Wayne, but throughout the state of Indiana, we have options. And this fourplex, duplex, and triplex project in Fort Wayne is really exciting. I would say it's the highest return available on new construction that I've seen over the last few years. 250,000 a unit, their townhouse style. You can see a rendering on the left, as well as an actual picture of the kitchen. We've got a kitchen island, granite counters, stainless appliances, nice roomy family room on these townhomes in Fort Wayne. They're pre-construction and they have a tax abatement. And because of those things, that's what's getting you that really high cap rate. It's a good way to attack expenses in what has been kind of a confusing market over the last few years. So you can certainly reach out to us about the Fort Wayne project. There are a number of duplexes and triplexes available. I think we're down to 2 fourplexes left though. And then a beautiful market. If you're looking for like an A tier Class A asset, we have a joint venture in Nashville, Tennessee, a place that just continues to blow up and go crazy. A Trammell Crow is opening an office there because they just see the growth that's happening in Nashville. Along the east bank of the Cumberland River, which is where downtown is, Oracle is developing a ton of acreage for multifamily mixed use, their offices, they're moving their headquarters there. Nashville is a big medical administration city, lots of jobs there related to that. And so we think that a play on Class A townhomes is really good. The ones that you're looking at on the right, those are about 5 miles from downtown Nashville. 5 miles from that East Bank area where Oracle is going in. Don't even have to take the freeway if you don't want to. There's a little state highway that'll get you down there. And these things go for more because you're in a high value market. But we're talking about 3-bed, 2.5, 2-car garage townhomes that are built like you would live in. They're beautiful. They're in a gated community with a pool and a clubhouse, and the rents are pretty high. You're getting into them at a 5 cap. I think, in Nashville on a Class A, that's probably what you would expect now. But the great deal we have arranged with the builder is if you use conventional financing through our preferred lender, we'll buy your rate down permanently to 4.99. There's no gimmicks on the rate, no 2-1 arm, no interest only for a period. It's a legitimate 4.99% interest rate for 30 years. So we're excited about that one too. I'm headed out there actually in a couple of days to get some more stuff done out there. And we've had a number of clients invest in those properties and they lease up well. To the main event. This is why you're here. This is what we promised you. East Powell. These are duplexes in Fort Worth, Texas. We're excited to talk to you about it. You can kind of see a little bit of a rendering of what they'll look like right there. In fact, a couple of them are just about there. We got to get concrete and some landscaping installed, but this is an opportunity to own duplexes in one of the fastest growing markets in the country for the lowest price, probably in the entire metro. And we recently did a price reduction on these, partly because we've got a new project we're working on. And I told you capital is intensive. So we're like, well, let's get these going. Let's make it an offer nobody can refuse and get them out the door. We'll do the management for everybody. And then we can move on to work on the next deal as well. So let me give you the highlights about East Powell. We're going to talk about floor plans, financials, and location through this. We have 10 lots on this little street called East Powell in Fort Worth. As it stands now, and we could change this, 6 of these lots are slated for our investor build program. This is a program where you take on construction financing and you close on the lot, and we sell the property to you at a wholesale price. We haven't yet totally determined that, right? Especially with this recent reduction on what I'm about to tell you. But the reason I bring that up is if you are an investor who has a capital gain of any kind that you're looking to deal with, this could be a good fit for you. And I mean a capital gain in the sale of stock, crypto, a business, real estate, anything. I say that because East Powell is located in a federal opportunity zone. And you remember the noise about this back during the first Trump administration, and now they've kind of resurrected it again. This is meant to facilitate development in disadvantaged areas. And so opportunity zones are often in C-class neighborhoods, right? And usually they're very rural or they're near downtown, which this one is. And it's interesting to see what happens because sometimes investors shy away from C-class, others don't. But when you bring an opportunity zone in, you start to see construction. You start to see changes, and that's what we've been seeing in East Powell is a new tenant base is moving into the area, new construction is happening, and because of its proximity to downtown Fort Worth, to Medical City and a few other places, it's becoming more and more desirable because people don't want to move way out onto the fringes of the metro if they need to live and work in those kinds of areas. So if you have a capital gain of some kind and you want to talk to us about investor build, we could probably still arrange that for you. As of now, though, the plan is to build at least 4 of these, get them to investors when they're completed. That doesn't give you the OZ benefit. And we will probably build the other 6 unless the right investor comes along that has opportunity zone benefits that they're exploring. It's, it can be rare, but it does happen. We've helped a number of people do it over the years. Let me show you what we got here. We'll take a look at the plans. And by the way, that's a little screenshot of one of the new builds of our properties in Alabama. So you can see the bottom floor is on the left, the top floor is on the right. These are designed for people that live in the urban core. You're not going to get a family with 2 or 3 kids in these units. I mean, it's possible, but it's not likely. More than likely, you're going to get a couple, a single person, or somebody that has 1 kid, or maybe even some roommates. You put 1-car garages on these things with the driveways. Totally works in this neighborhood. You drive through it. People park in driveways. They park on the street, but they like that garage for parking or storage. And that's where your mechanicals and your washer and dryer will be. The front door is just on the inside of those, and there's a half bath right as you get into the unit. And that's where your family room and kitchen is, along with a back door to a little patio area. And on the top level, you see the stairs enter from kind of the middle of the unit, and those 2 bedrooms up there share the other bathroom. And the main bedroom is in the back. It's got a nice size walk-in closet, and the other bedroom is in the front of the unit. So it's simple, but it's a low-cost way for people to live in a very convenient area, like I said, in the core of Dallas-Fort Worth. Here's a little snapshot of the subdivision. And I shouldn't call it a subdivision. It was just lots. And you're seeing a lot of construction happen through this area because it is zoned to accept duplexes. And that has caught the attention of not just us, but other local investors. And you can see on the map there that lots 5, 8, 15, and 16 is where we've already come up out of the ground. And these duplexes are getting pretty close to being done. There's an interesting story that I'll tell you because if you go onto Google Maps and Google Street View, you're going to absolutely hate it. And that's because we bought these lots a while ago. I think it was in 2018 or something like that, I was told, that we bought these lots. And we ran into a big problem with Fort Worth City. Turns out the utilities were a complete mess, had to go through a total redesign, a bunch of engineering, a bunch of work, and it took years. And so that street just looks on Google Street View abandoned because frankly it was. We had to just shut down construction and secure those units while we worked through the utility problems. But if you're to go to it now, and we'll send out an email blast with the latest pictures. We've got the roads paved, curb and gutter in, driveways are about to go in. Looks completely different, and so we're happy with how it's been turning out. And this has been a little submarket that the Peak Group has really thrived in. We've built a number of duplexes, and we manage a lot of properties in the area, and have a really good idea for the tenant base, what rents are. We just know how to operate here. All right, so you can see those four CO'd lots, and then the ones with the green hammer on them, those are slated for investor build. However, if an investor signed a purchase agreement and wanted to buy one of those, then we could just do the CO model for them as well with all the other incentives. And you probably can't see my mouse too well, but there's construction going on this lot. There's construction going on this lot. Like it's just happening everywhere in the area. So let's talk about the financials. All right, some key details. There's a little elevation of the duplex and what they look like. We have slashed that price from 410 to 389, right? Because like I said, we would like to just build these things, free up our development capital, and go on to our next project that we plan to build in Fort Worth that's going to need that capital soon. Rents are typically 1,600 a unit. Your closing can be contingent on sourcing a tenant for that amount. And yes, we will give you visibility into their application to ensure they're qualified and they're not just a warm body. I've seen that happen before in this business. I already mentioned we're located in a federal opportunity zone for this project. One great incentive is we have that 4.99 forward committed interest rate. So you're buying with debt that is a lot lower than where the cap rate is. And that's a good recipe for success, a good recipe for cash flow. Cap rate will be 6.2. Those are actual taxes, actual insurance bids, our actual management fees. There's no funny business in that cap rate where it's going to dip when some other expense shows up. We have vetted this out closely, and it's all based on actual quotes from insurance brokers and actual tax rates. Each unit is 928 square feet, and as I said before, 2 beds and 1.5 baths, and we've got that 1-car garage attached to it. Here's a snapshot of your financials, right? You can see on your left, itemized as monthly and yearly. We'll be collecting $3,200 a month in rent. Now, we don't have a vacancy rate on here because in the first year, there is no vacancy. We deliver you the property with a tenant in place. But in the pro forma, and you're certainly welcome to email us, we'll give contact information at the end. We do phase in a 5% vacancy rate starting in the second year so that you're, properly analyzing this deal. So that gives you an expense ratio of 37.1 once the vacancy settles in a little over 40, which is about right for Texas. I've done a lot of properties in Texas. You can see you get $24,000 in annual net operating income. And once we account for our debt, we're assuming you're putting 25% down with a 4.99 rate. You should have $225 positive cash flow per door, or $449 a month for the duplex. That's a little north of a 5% cash on cash. But remember, cash on cash does not take into account the other metrics of the ideal method of getting paid. Your depreciation, appreciation, leverage, all those other things. It's just the cash flow, which is good by itself, but much sweeter once we fold the rest of that in. You can see where your taxes go. Taxes are high in Texas, about $9,000 a year for this duplex. Insurance, like I said, is an actual quote, and that's our management fee on there. There's no HOA. Utilities are on the tenant unless it's not rented, of course. Landscaping is the tenant takes care of that. Now, if you're vacant or they're not taking care of it, you may have to step in and do something like that. So we love to help work pro formas with investors. So if you want to do like a sensitivity analysis with us and say, well, what if rent is X? What if this is maintenance is Y, right? Then we're certainly happy to take a look at it with you. Here's our rent survey for the area. I won't spend too much time because it's a lot to squint at on a webinar, but You can see we pulled everything inside of 2 miles, and you can get rents from anywhere from 1,500 to 1,895. A lot of it depends on beds and baths and quality of finish and year build and a number of things. But based on what we see there, we're very confident in getting our rents of 1,600 per door, right? You can see the average rent for a two-bed single family is 1,776, right, in Fort Worth. But if we're taking down to like a townhome, the premises, somebody will pay a little bit less than that. But those are all rent comps, rent surveys, ideas. But we have the best metric ever, which is we already lease for that amount in the area, so we know what we'll get. I'll give you an idea for the interior, and this is not the exact interior. That's a little bigger unit. It's staged. It looks beautiful. This one is probably 10 minutes away, some duplexes that we built in Fort Worth before. But we're typically going to put granite counters, stainless appliances, right? LVP flooring. You'll put carpet on the stairs and in the bedrooms, but then you'll put LVP in the hallways, laundry, or bathrooms, and so on and so forth. So that kind of gives a little bit more nicer unit feel to the tenants, but it also keeps that maintenance a little bit lower when you're using that type of flooring. So you can see just some of the high level stats over there, and our property management team is always available for maintenance calls. We handle that stuff. Sometimes I get asked by people, what happens if the water heater goes out in the middle of the night, or the air conditioner goes out in the middle of the summer? That's what our management team is there for. And typically in your management agreement with us, we'll be able to spend up to $500 out of your rent to handle those maintenance items and not make them a headache for you. The premise being you don't want to hear about the clogged toilet, just deal with it, right? But anytime we get over a certain amount, that's when we have to go to you for approval. So, and it's not like a fire drill. We just will need to hear from you, within a day or two. Some of these things we're required to take care of by Texas law. For example, if it is the dead of summer and a air conditioner goes out, we're going to have to just deal with it and then, settle that up with you if you're unavailable. So let's get into location, right? This is an interesting location. And like I told you, I would characterize this as a C-class area. Some of you can see all the homes are full. People are living in these homes. So you don't see board ups. I think when you start seeing board ups, you're getting into more of a D-class area. And those are often beyond saving. But with it being in a opportunity zone, we're seeing it kind of start to experience that transition because people want to live there for convenience. You're right near the 287 freeway, just probably less than a mile from Interstate 35. And you can see here I have the little pin that I created on the bottom right. That's where East Powell is. And straight to your right, to the east, you're about 34 miles from downtown Dallas. Up to the top right, to the northeast, you're about 24 miles to Dallas Fort Worth International Airport. And I've kind of highlighted the core of Fort Worth here. You got to keep in mind, there's in excess of 7 million people in the Dallas Fort Worth metro. So this is just a microscopic look at businesses and notable locations within Fort Worth. It's massive. You can take hours driving from one end to the other. You are 4 miles exactly to downtown Fort Worth. It's technically not on the screen here, but I put the logo. You're 13 miles to Lockheed Martin, giant defense contractor. You're 3 miles to Medical City Healthcare, a big campus of hospitals and medical research. So you could see just how close we are to so many of these things and why it would be desirable for a tenant to drive 2, 3, 4, 5 miles to work and avoid the concrete jungle to a degree that Dallas Fort Worth has become, because it's just that massive, massive urban sprawl. So we have a great little animation that Paige in our office created. Shout out to Paige. Good job. I've told you about what's kind of happening in the area, and I wanted to show you the new construction that's happening. So this is animated, and it shows properties that we've built, that others have built in the area, because when I say C-class, you can almost always assume that the homes built in the area were probably built in the 40s or the 50s, right? And I think that's true here. And a lot of them are, but they're all full. They're all full of tenants that want that convenient living. But because of the opportunity zone component and because of the good location just close to downtown, it's experiencing what a lot of other cities are at that new construction and revitalization. So you can see our graphic here. We're zooming in to the East Powell neighborhood. That's our rendering of what it will look like when all the grass and everything is done. And you just go nearby and you can see on Ash Crescent, less than a mile away, new duplexes that we've built. They are full, right? Single family home, somebody just recently completed. You can tell by the construction style. And like I said, these are all within less than 2 miles, probably less than a mile in most cases. Newer home there, right? Newer home there. They just drop it in everywhere. So you'll drive through this area and you'll see, like I said, five or six older homes and then big, brand new, beautiful duplex or a new, nice looking single family home like that. And I've just found that when a neighborhood is attracting new construction capital, that's a good thing. And if you can participate in it as an investor and get a duplex for 389 in the core of what will soon be the third largest metro in America, I think that's gonna be a win for you. You can see how massive the whole area is and where it is in relation to everything, right? We've got downtown Fort Worth right here, Dallas over here. So we're excited about it. And that's not even showing everything. There's so much more to the metro. So here's what we want to do with you next, right? If you're an investor, whether it's East Powell, whether it's another property, we'd like to know what you're looking to achieve. Are you a cash flow? Are you an equity investor? Are you looking for tax breaks? If we know that, we can kind of match you up with the best opportunities available within our company. We can also help you, like I told you earlier, do stress tests and sensitivity analyses on these properties. Like, what if the taxes go up? What if the insurance goes up? So that you can kind of find out where your boundaries are, where your guardrails are, to the extent that you can be comfortable with one of our deals. And from there, once you decide, we really take it. We need you to sign some stuff. We need you to wire your down payment and your deposits to title, but we'll bring in lender. We bring in everything front to back. And it makes it for a pretty seamless process for you, an investor who maybe you live around the corner, maybe you live in San Francisco or New York or all over the place. We've got investors from everywhere. So you can email us at realestateadvisors@thepeak.group, right? You can also scan that. I'll leave it on here for a second. And that'll allow you to register and get our emails and everything and talk to us that way. You, of course, have our disclaimer here of these are investments. Things can and do change for better, for worse sometimes. So do your due diligence, talk with the appropriate professionals before you make any decisions on an investment like this. So I'll go back to the Connect page and I'll take one more moment, but if anyone has questions, you're welcome to put them in the chat. I will address a few questions in the chat. But in the meantime, just a refresher on timing for East Powell while people come up with questions. There are 4 duplexes that we expect the first 2 to be ready within the next 2 weeks, 3 weeks. We've got to get power in place on the first 2. Don't know if you heard, but there was a little bit of a winter storm episode in most of the country recently. So we've been waiting on a power meter on 2 of these duplexes. And to put it bluntly, we've not been the top priority of the power company, but that's all settling down now. So there's 2 of those ready in the next 30. I would say the other 2 are the next 60. And the other 6 lots behind that, we can have a discussion if you're interested in those. So, and I think that kind of addresses one of the questions we had, which was, are these ready or in construction? They are right on the line between the 2. Like I said, there's a number of them that are almost ready. So you could contract on one of them, make it subject to tenant placement and do inspections of a brand new property, and that would be no problem. So that's your timing. We'll release details on the investor build properties as well. We had another question come in asking about, are these okay for IRA investments? Absolutely, yes. Now, IRA, you can bring in all cash. You could technically finance. In fact, we do know of a couple of banks that do non-recourse debt for real estate, which is what you have to do through an IRA. I would just encourage you to make sure that you understand any consequences around UBIT, unrelated business income tax. Sometimes you can run into that when you use leverage on real estate within your IRA. So just be aware of that. I got another question about management in the area. I will give you my best answer. They're asking, what our experience is like in the area. I'll say it's deep. We manage a lot of properties there and in West Fort Worth. I think we've got at least 25 other doors under management in the area. So yeah, like I had told you earlier, our property management team knows it well, knows the tenant base well, and knows how to operate in that neighborhood. And then another one. Okay, so it's about timing. So let's assume that you wanted to use the 4.99 interest rate. And by the way, on that IRA question, you can't use that 4.99 rate on an IRA loan. Now, we could probably take some of the capital allocated to buy your rate down and see what the IRA lender would do, or maybe even just credit you against the purchase price. That would be a need to be a discussion that we have. So sorry about that squirrel, but I thought of it in reference to the IRA question. But beyond that, if you're going to go conventional, let's assume you told me tomorrow, yes, I would like to buy duplex number 6. We'll send you a purchase agreement. We'll get you with the lender. And assuming we get, like I said, we're in that last probably 95th percentile of the construction. Assuming that's all handled over the next couple of weeks, we get our appraisal back. We'll get your tenant placed probably within the next 30 days tops. You could be closed and be the owner of one of these duplexes at fastest 30 days from now. At slowest 60. I think probably 45 is a better projection. But that's about what we expect the timing to look like. And I know how this goes. You're going to do it. And if I'm being bold here, I apologize, but I feel the need to do it. You're going to close. You're going to get a couple of rent checks. You're going to realize how seamless of a process it was. And you're probably going to call us and say, let's do it again, which we would love. We have a lot of investors come back over and over for this kind of product. So everybody, thank you again. I believe I hit all of the questions that some were emailed to me, some were put in the chat, but I'll leave the screen up for just another moment. Please contact us here at the Peak Group if you'd like to talk about this or any of the other opportunities that I hinted at early in the webinar. Thank you again for coming. Have a great day, and we will talk to you soon.